We're joined now by Esther George, the president of the Kansas City Federal Reserve Bank, who is the host of this year's symposium, economic conference here in Jackson Hole once again. And Esther, thanks for joining us again on Fox Business.
Thank you.
Well, let's go right to policy, because you have this year, you're a voting member of the Fed policy body, the FOMC, and you've been pretty consistently voting to start to raise rates. And you've been dissenting. You've been the only one out there doing that. Why have you been voting that way, and what are you concerned about?
So as I look at the data, as I look at the economy and the progress it's made, I judge that we are nearing full employment, that inflation is low and stable, and that we should take advantage of the opportunity to remove some of the accommodation. I'm not looking for high interest rates by any means. I'm not trying to slow down the economy. But I think in the interest of long run, sustainable growth, we should be raising rates gradually.
Do you see inflation lurking around the corner? Because as you know, the headline rate of the one inflation indicator that you and your colleagues like to watch is really just about 1%, and your target is 2%. So where do you see inflation lurking?
So in the medium-term forecast, I still suspect that we will see inflation moving up, and frankly we have over the last few months begun to see, and by other metrics it looks like inflation is beginning to stir. So again, I don't think this is an issue of inflation being too high. I think it's an opportunity to begin to normalize interest rates to the benefit of the economy.
And your concern is what? That if the Fed waits, that it could get behind the curve?
So we know that long-term stability, really the Fed's goal is to make sure we have sustained growth for the long term. And rates that are this low have the potential to create imbalances. They can cause markets to misprice risk. And I think to avoid those kinds of incentives, again, not tightening policy to the detriment of the economy, but removing some of this accommodation would be appropriate.
And we're just talking about another quarter point move in the short-term federal funds rate.
Right.
That's what you're talking about.
Right.
Well, some of your colleagues have been starting to sound like they might be coming around to your point of view. Talked to Bill Dudley at the New York Fed recently, and he said that he thought that the economy was getting strong enough to possibly be able to handle a small rate increase, as you just outlined, and he thought that could come as early as September. I know you're not speaking for your colleagues, but do you sense that they might be coming around now to your point of view, and you have meetings in September, November, and December? I know you voted in July, the most recent meeting, to raise rates, so you'd be ready to go in September, I assume, again.
So I think assuming there's no change in the outlook, I would still be supportive of that. But again, you have to see how things look as we get between now and the September meeting, and how others judge that. We'll learn at the meeting.
Yeah, and you have a jobs report and some other inflation indicators between now and then. So I know they'll be watching it as well as you. Let's talk about this year's symposium. It's the title of it is "Designing Resilient Monetary Policy Frameworks for the Future." What's that about, and what do you hope comes out of this session?
So one of the things the Federal Reserve and I think other central banks are faced with is with this unconventional policy that they've undertaken for a number of years, that thinking ahead to how monetary policy will work when you're close to the zero lower bound, when you've been using balance sheet policies. It's a good time to talk about those issues, and so we're looking forward to the papers that will come forward, looking at everything from negative interest rates to the financial system landscape right now and how that looks.
And we should point out that historically this symposium, this conference, has produced over time real changes in policy. What kind of discussion here do you think might actually plant the seed for some policies in the future?
Well, what we always hope for is that in addition to the very good papers that come forward, that you get the kind of discussion that really looks at the issue from both sides. So you'll have discussants, you'll have participation from those that are attending to really push against these ideas and hopefully in the end come out with a better understanding of what the possibilities are around these issues.
Because still some of this is uncharted waters,
Exactly.
coming out of this Great Recession and all this unconventional policy. One last thing before we let you go, there are protesters showing up here once again, the Fed Up protesters who are concerned about issues like income inequality and the Fed's role and have been pushing for reforms and other things. You have decided to hold a meeting with them on Thursday before the conference formally kicks off. What is that meeting about, and what do you hope to accomplish at that meeting with this group?
So Peter, we initiated the idea of having this meeting, and that I would invite my colleagues to the extent they were interested and able to come. This is a highly visible event, and I know why the group is here, but for the long term, where the reserve banks can really engage with the issues that this group is concerned about, is work we've done for 3 decades or more, and that is to focus on the issues affecting low and moderate income individuals in our communities. And each one of the regional banks has a community development office and resources to bring to bear to those. So I think where the issues can really be tackled are really back home in the neighborhoods and in the communities where these individuals live.
All right. Esther George of the Kansas City Fed, thanks for joining us once again on
Thank
Fox
you.
Business.